All right, so good afternoon, everyone. We call this in economics the graveyard slot. Do you want to know why? The reason is that over lunch, people tend to relax. They obviously have food to eat. The blood leaves the brain, goes to the stomach to start to digest the food. So when they come back, they're just not interested in whatever the first speaker has to say. So all speakers try to avoid the first slot after lunch. Just my luck, I've landed the first slot after lunch. So how are you doing? How are you doing? Fantastic. Okay. So look, there's a lot going on in the world. So I'm going to freeform because there's too much, I think, going on to pull together in a few slides in 25 minutes. So actually, can I start with one joke? I hope I didn't say this one last year. It just relaxes me. On the way up, I was listening to three surgeons talking about the operations that they did, and they were basically boasting about how simple it was. The first one said, I usually operate on mathematicians. It's really simple. Everything is color-coded. The second guy said, I work in pharmaceuticals, and everything is numerically coded. The last one said, I operate on economists. There's only two body parts, a mouth and an arsehole. And they're interchangeable. I can assure you I'm speaking through my mouth. So what's going on? Obviously, June 23rd, Brexit. We are leaving the EU. What the financial markets have now realized is that leaving the EU means not just, there's two aspects to the EU. There's a single currency. We're not in that. There is the customs union. Actually, there's three aspects. There's a customs union, which we are in, which puts tariff walls up for every member of the EU. But we're in the single market, which means that we face common rules and regulations across the way we do business in industry. And there's four key rules to that. Movement of people, movement of capital, movement of services, and movement of goods. If you leave the EU, and you leave the single market, and you leave the customs union, you will not have access to the single market unless you strike a new trade deal. We will need to strike a new trade deal. Because, as I said, what the financial markets have just twigged, which is why sterling has dropped to 121, the sort of level it fell by in percentage terms in the 1967 crisis where Wilson says the pound is worth less in your pocket. That's what triggered a crisis then. We've had a bigger drop than that recently. Actually, there was another drop of a similar size to this in the 1970s, which led to the UK having to go capping down to the IMF. These are different times, so it won't happen. But that's the size of the drop that's taken place in the currency. It was 149 against the dollar on the 22nd of June. It's now 121. So something has happened in perceptions about the UK. The vote has been taken by the politicians as meaning that we must leave the single market. That's the only way you can end free movement of people. So that's what will happen, in my opinion. Clearly, that's what should happen for the 51.7% that voted to leave compared with the 48.3% that didn't, which didn't include Manchester, I think, actually. Manchester voted to remain. Of course, so did London and the South East. But be it as it may, we're one country, so the decision has been made, a referendum has been called, we're leaving. But the markets didn't believe that it was actually going to happen in quite this way. They thought it would be fudged. It's not going to be fudged. We have to leave the single market and the customs union. So that has effects. The first effect you are already seeing. So for the hotels and catering industry, the fall in the currency is actually good news, because it means foreign visitors will find it much cheaper to come to the UK. So you should see a surge in numbers. You'll also see more stay vacationers, because it's more expensive to go abroad on holiday. And pretty soon, after 2 years, triggering it in March 2017, we'll be out by April 2019. It means that you're going to need a visa, probably, as well, to get into some countries in Europe. We're going to have to strike deals with all of the countries separately, and we currently have deals with because we're going to pick and choose the ones that we want to trade with within the EU, I would suspect. So it's going to get more complicated. Now, the thing about a falling currency is it can be good news for some sectors. As I said, it's great news for this sector. It cheapens UK PLC to the rest of the world. It makes it more attractive to invest in the UK, to buy UK assets. The other point is, of course, that and I'm going to come back to this bit, the global backdrop in a few moments, but we've already announced, for instance, that there'll be a doubling of air flights between the UK and China. It was announced in the papers yesterday. And that clearly is a good move because it's one of the countries that the UK sees as a fast, expanding, big market. Actually, the growth in tourist numbers is dominated by the Chinese as the middle-class incomes around the world grow. There's millions of Chinese, hundreds of millions, that will travel more freely than previously. And they have lots to spend. I think they're the biggest spenders in a range of European countries, including the UK. Actually, when you go to Marylebone Station, there's a special train that takes people straight to the site where you can spend money in Oxford, or near Oxford. There's lots of activity to encourage tourist dollars to be spent in the UK. And this sector benefits from that. The downside of the fall in the currency, though, for this sector, and one of the challenges it will face, is that if there is a stop to migration or a stemming of the flow of those from Europe, then it could have it will have cost implications, because the issue around migration that is not well understood in senior circles is it is not just skilled migration which is required in the UK. Unskilled jobs or jobs with very low skills are also incredibly important to some industries. You can think of fruit pickers, for example, but you can think of this industry, where care industry, where there's a large proportion of people that are either on or close to minimum wage. And sometimes those jobs, this is again where the economics is useful, right? Some people think that entry-level jobs mean that there's a class of people who are always poor. Not true. Entry-level jobs might be useful given a stage in your life, a transient stage in your life, in fact. And so being able to get access to those jobs enables you to have the flexibility to maybe work and study, to maybe do this while you're planning on doing something else. So these jobs are necessary. And the efforts to stop migration for low-skilled jobs misses the point. Because after all, remember the backdrop in the UK. Let's just quickly talk about the position of the UK economy. We have full employment. Do you know that? The unemployment rate in the UK is 4.9%. Most economists estimate the natural rate of employment, the rate of employment that does not generate inflation, the maximum level it could fall to, is between 4.75 and 5.25. It may be spuriously accurate, but it is in that range. We have the highest level of employment we have ever had in the UK. The employment rate is 74.5% as a percentage of the labour force, i.e. the people available to work. That is a big number. It actually explains why, even though we have low productivity compared with France or Europe generally, we are able to grow faster on average than Europe has done over the last 15 years, even though we have worse productivity, because we work longer hours and we employ more people. That's how you can bridge the gap when you have low productivity. And the truth is, we have low productivity. It takes an average UK worker 5 days to produce what it takes the average French worker 4 days to produce. True. Our productivity levels are 18% below the European average. Really. But as I said, we make up for it by working longer hours, more flexibly, and by employing more people. That's the flip side of not spending more money on plant and machinery. And maybe some argue the reason why France has to work more intelligently is because its sclerotic laws means that it's not flexible in employing people. There's all sorts of restrictions on how you hire and fire that we don't have in the UK. The arguments you sometimes hear is that Brexit, I'm just looking for a clock, Brexit has meant that every piece of data that comes out in the UK is looked at in terms of its impact on Brexit. So retail sales are holding up well, means that Brexit hasn't impacted the UK. The increase in the industrial output figures over the last month shows that Brexit hasn't impacted the UK. Nonsense. We haven't left yet, so there is no impact other than uncertainties generated by what's going to happen when the negotiations start. So that's when we should look at it. The economy is actually in good shape. It is. The growth rate this year is probably going to be close to 1.5% to 2%. Let's not say 1.8 because it could be 1.6 or it could be 1.9. Next year we're going to slow because the world economy has slowed, because world trade has slowed. IMF is worried about global growth because they're worried about global trade volumes. I'll come back to global trade volumes because it's absolutely incredibly important that we remember how crucial trade is to economic prosperity and to the ultimate test of living standards, increases in productivity. So the UK economy is seeing falls in unemployment, growth in employment, high levels of vacancies, although vacancies are beginning to slow somewhat, they still remain high. The manufacturing sector is growing, albeit weakly. It's growing very slowly because the global backdrop is a challenging one. We have seen low oil prices, which have reduced firms' input costs, so their profitability has been held up by that. We see continued low growth in relative pay in the UK, which means that people can be employed at levels that firms can afford, and therefore they continue to employ them in high numbers. The key markets we operate in have all shown signs of a recovery. Even the EU, remember, is recovering. In the first quarter, the EU grew faster than the UK. There are signs that Draghi's policy of doing whatever it takes to rescue the Eurozone economy is working. Growth is likely in the Eurozone this year to be close to 2%. The backdrop for the US is pretty good. And I know that in the Trump view of America, it's never been this bad. It's simply not true. People should fact check some of these things, which they never do, of course. I mean, every time a politician speaks, there should be a fact check of whether the fact is true or not. I hear that we live in a post-fact world. I don't know what that phrase means. Does that mean that someone can say whatever they like, and it doesn't matter whether it's true or not, it's just whether you feel that it's right? So I feel the world is flat. Does that make it flat? No, of course it doesn't. It's still bloody round, isn't it? These strange conversations have been held out there. I suspect it's because, the Twitter world is a new one and people will get used to folks getting up and saying stuff and reaching an audience that believes everything they say and not checking the facts. And at some point there'll be a backlash against this lack of belief in the statistical realities, which is that, frankly, never before has the global economy have so much. I did a little check recently of the key indicators you should look at, like, for example, infant mortality rates. They've plummeted. Infant mortality rates in India, for example, has fallen by over 700%. Even in the UK, it's fallen by 50%. It was very low anyway, okay, like 3.3 per 100,000, right? But it's fallen in the last 40 years. Life expectancy has gone up by nearly 20 years since the 1940s. That's why the NHS costs so much, by the way. Plus the technology, which also means you can save more lives, but it's more expensive to do so. which you never hear discussed in any forum. I may come back to that because I was watching a question time panel and someone was saying, of course, one of the reasons why we've got to stop migration is because the cost of services in the NHS is rising so much. Well, it's got nothing to do with migrants because they work in it, they're younger, they draw on it less than anybody else, they pay more in. Actually, it's because we've got an aging population and because we live longer, it's expensive to keep someone in intensive care or in those kind of units. It's like £3,000 a day. When you hear the figures, it's astonishing that actually the NHS is so efficient because the demands on it are so great. Those are the sorts of things that should be talked about, as well as the fact that, well, look, when growth occurs, it demands a supply response. That's what creates growth. When you respond to the fact that you need more homes, or you respond to the fact that you need more schools, that is what creates growth, by responding to that increase in demand. Lack of population growth means lack of growth. It does. If you have the productivity, you grow. So that's where the risk is the opportunities are missed for all sorts of reasons, other than the ones which could lead to a better economic outcome for everyone. So the UK economy is in pretty good shape as it faces the challenges of leaving the EU in its entirety and striking new deals. The problem is going to be between leaving and those new deals coming on board. We're going to have an interim arrangement which is around WTO, World Trade Organization rules, which will impose extra tariffs on some things and maybe lower tariff on other things. But actually, I've got to tell you that there's an economic theory which says we should just go to a no-tariff world, where we just say zero tariffs across the board for the UK. Why? Next year, we are on the 200th anniversary of David Ricardo, who was an MP in Parliament. He was a multimillionaire. He was an economist, so he actually traded what he talked. And he proved what Adam Smith said kind of 20 years before him, which is that specialization, economies of scale, factorization drives efficiency because it means that you can produce more with the same or less input. And if you spread that internationally, you spread prosperity internationally. And what David Ricardo proved conclusively is that even if you produce everything better than another country, and he used the example of English cloth and Portuguese wine. And he showed how it is that even if we produce wine and cloth, we should still trade with Portugal. Why? Because you don't produce every good as efficiently. And it comes down to the theory of comparative advantage. What does that mean? If you do what you're comparatively best at, someone else does what they're comparatively best at, you're both better off in exchanging goods and services. And it works. You could argue international trade and globalization has saved the world because that is what spread economic prosperity everywhere. It's also spread ideas, of course. Someone says, well, yeah, but he didn't understand about migration of international capital, firms locating in different countries. That's the point. It's one global marketplace. You locate where it's efficient to do so. I mean, did you know, for example, that Walmart is responsible for nearly 10% of the UK's annual current account deficit with China? Why? Because it produces consumer goods in China and imports them back into the US, sells them into the US to US consumers cheaply. Because China's labor costs are much lower than they are in the US. In doing that, US consumers gain enormously. It leaves them with free income that they can spend on other goods and services, typically locally produced. That is how the US consumers gain. The argument sometimes is, well, those firms in the US that have been hit by this need to be protected. No, they don't. They need to get more efficient. That's what they need to do. Yeah, that's what drives growth. That's what drives productivity. That's what drives innovation. And that's what makes everyone better off. So international trade is a good thing. And the UK is a trading nation. And that's how it makes its living. And of course, that will happen when we leave the EU. But these deals can take a long time to strike. Typically, they take between 5 and 9 years. So there has to be something interim when we leave the EU in I don't know, April 2019, assuming that the Article 50 negotiations for leaving are triggered in March of next year. So the backdrop for the UK is that there will be a period of uncertainty when the negotiations start, and then it's going to be all about what happens and what's put in place post-leaving. It doesn't mean that there are not opportunities, because clearly there are opportunities. In the meantime, the UK economy continues to grow at between 1.5% and 2%. Why can't the UK grow faster than that? It's because of the impediments in the UK. So what are our domestic challenges? Our domestic challenges are not actually Brexit. It's the things which were around before Brexit. And it's around the fact that we have low skills, on average. The high end is excellent. Of course it is. We have a comparative advantage in services. 11% of the UK economy is manufacturing. 6% is construction. Okay? 80% is services, including, obviously, tourism and related activities. Okay? That's where our strength is. Let's talk about returning to some nirvana, these halcyon days of when manufacturing was dominant, are absolute nonsense. Because our top 3 industrial sectors are not British-owned. They operate here. Cars. What's the biggest manufacturer in the UK in terms of employment of UK workers? I'll tell you who. Tata. So, I mean, it's absolutely clear that the UK is an internationalized economy. We need skills uplifts through focus on apprenticeships, through focus on learning, not just for 20%, but for everybody. The top 5 countries in terms of education are typically Finnish, Swedish, Singapore, Taiwan, Korea. Why? Because they don't assume that you can only get 20% to be the best. They assume that everyone can be the best. And the system is set up that way. That's why grammar schools are not a good idea. It may be a good idea if we work on an individual level. I must do the best for my children. Of course it does. But when you think of the country as a whole, it's not the way forward. It's making sure that everyone is trained to the highest level based on their skills and abilities and aptitude. That's the point. Which is not to say that you expect everyone to achieve the same outcomes. What they want is equality of opportunity rather than equality of outcome. Economists will unequivocally say they do not believe in equality of outcome. That's just fantasy. What you want is equality of opportunity. The other point is that productivity is low because we don't have enough flexibility in local governments, deciding on what's done locally. We don't have enough houses being built in the right places. And we need to focus a lot more on incentives for investment in kind of new technologies where we are strong. So, because that is where the UK is seeing fastest growth. It is where the opportunities are. That's where the profits lie. The good news, though, is that the starting point is actually a very positive one. What we need to do is to make sure that we focus on the skill sets that the UK has. Outward looking, flexible, low regulation, access to finance, which is, readily available. Governments to essentially not spend too much. One of the problems with having big fiscal deficits forever is that it crowds out private sector investment. It really does. There may be a short-term boost from running big deficits, but there's no long-term boost from doing so. It's actually a big negative for a country that does that. Running current account deficits is okay so long as you finance it by being an open, dynamic economy, selling assets abroad. A cheapening of the currency is actually a sign that UK economic performance long-term has declined. It means that it's become cheaper to invest in, as it should. That's the way you continue to remain prosperous. But you have to accept that politically. You can't do both things. You can't both shut down and expect to exist when you run big current account deficits. Because running a big current account deficit is the flip side of having insufficient domestic savings given your level of consumption, which means that money has to flow in from overseas to fund your level of consumption. And that means being flexible. And that suits this industry greatly because it benefits from huge inflows and from more people being prosperous domestically and staying in with all of the opportunities for all of the interesting things that tourists can do in the UK. And also, as I said, having a strong dynamic economy boosts this sector enormously. Let me just end by talking quickly about exchange rate, where do I think it will go? Well, it's going to stay low because the exchange rate is the real barometer of perceptions about what happens next. It could rise from these levels if there's more positive news about what happens next, but it could lurch a little lower. Interest rates are clearly going to remain low. One of the reasons the pound is down is because the response of the Bank of England to leaving the EU was to cut interest rates 0.25 percentage point and to talk about cutting them to 0.1% in November. Now, he will not cut them in November because there's now no need to. But Philip Hammond, the new Chancellor, will loosen fiscal policy. He's not going to cut expenditure by as much, which means the fiscal deficit will be higher for rather longer, which means outstanding debt as a proportion of GDP is going to go up. But borrowing costs for the government has fallen to under 1%. Now, markets, if they have any signals, tell you when you have 10-year government bond yields at these kinds of levels, the future sees no long-term growth or no long-term inflation risk. So it's not good news that yields are this low or that they're likely to stay there for a long time. So the good news, though, is that it means people can fund their debts at very low levels, but don't assume that it's going to remain as exceptionally low as it is forever. And maybe that is one reason why firms who think this don't invest as much as they could, because they are too worried about a time when they may have to pay higher interest rates. Of course, we all know that these 0.1% rates are not real rates that you and I would face when we were borrowing. That isn't my mortgage rate. I wish it was, but it isn't. So in reality, financing costs are somewhat higher than the costs shown here. Rest of the world, as I said, Europe has shown signs of recovery. China remains a fast growth economy, even though it is slow and faces its own challenges. The US, I think there was a risk it would elect Trump, but I think he's shooting himself in the head with both barrels. And so it looks unlikely that he will win in November, although I bet it will be closer than the polls suggest, because the big social changes taking place in the US with some feeling they're losing power and marginalized. I think he does have some support, because that kind of demagogic type language is not just in America, it's common across a range of countries now. And it's because of a perception that the benefits of globalization and technical change, which actually lie behind it, are not being spread evenly. And that's partly because we haven't done enough to compensate the losers from that which the winners have made. But if you look at the statistics within countries and between countries, right, there is a paradox. The truth is that everyone is better off, and the poor are better off more than anyone else. You know, Pew Research showed that between 2008 and 2014, 2008 and 2014, 1 billion people fell out of the category of poor. The global middle class, both at the lower middle class end, the middle class end, and the upper income end, went up. Everyone is better off. But the perception is that they're not. And that is the challenge for policymakers. Pandering to it risks worsening the prospects for the less well-off, not bettering them. So let's end on an optimistic note. I think that the prospects for growth remain positive. No one's saying that there's going to be a recession, either globally or in the UK, and that is good news. What we're talking about here is how we adjust to a changed environment, and we must be positive and be creative in the way that we do that. Now, one of the ways you can think about some of the economic stats coming out is to read a book written by, I think it's Trevor Williams, and you can get it at www.wiley.com/trading economics, Trevor Williams. Thank you very much for listening.